about is there systemic manipulation in the gold market or is there not? I'm on the not camp. We all own dollars to some extent, and if we own dollars, therefore we are short gold and silver. Those extra dollars filter back into the gold market through the futures and create what looks like manipulation. So I suggest that whatever camp you're in, we want the same things. However we see it happening, it's happening. And let's prepare for the end of it because that's coming.
In today's news recap, Citi bullish on gold, Americans purchase hit record high. Citi, the American multinational lender, reaffirmed its short-term gold price target at $3,500 an ounce, citing the recent increase in tariffs and significant geopolitical risks. According to a note released on Sunday, the bank raised its estimate of gold prices from $3,000 to $3,300 per ounce to a range of $3,100 to $3,500 per ounce. The U.S. bank maintains its long-term cautious approach to gold despite the upgrade. The bank cites two main explanations: the potential for growth and associated equity risks diminishing as U.S. households now own more gold than they had in 50 years. The Federal Reserve lowers interest rates, and the midterm elections draw near. The short-term price targets for palladium and platinum remain $1,050 and $900 per ounce, respectively. Citi believes that a sustained upward trend requires a genuine improvement in end-use demand, and the recent platinum rally is viewed as headline-driven. The palladium rally represents yet another opportunity, according to the bank. Citi has maintained a bullish outlook on gold, initially increasing its target price to $3,500 per ounce in April 2025. On April 22nd, concerns about the Federal Reserve's independence caused the price of gold to surpass its previous record. Citi called for a period of consolidation for gold prices as trade tensions began to de-escalate and lowered its short-term target to $3,150 per ounce, which was reached on May 15th. In the second half of 2025, Citi predicts that gold prices will continue to stabilize at their current levels. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
Well, they're not saying anything about nickel, which was a problem in March 2022. They're not saying anything about any other commodity except gold. And now, but what importance does gold have to the ECB and its member banks? You know, if you're a Keynesian, then it's just what do they call it? They call it a barbarous relic. It has no connection to the monetary system anymore. Even people in the libertarian camp, they say, oh, we're no longer on the gold standard, so there's no connection, so it doesn't matter anymore. But then why would the ECB be so worried about gold specifically? This goes back to it's ancient, I guess, ancient in the sense that libertarians have been arguing with ourselves about this, about is there systemic manipulation in the gold market or is there not? I'm on the not camp, not in the sense that I don't think there is any manipulation, but I don't think the manipulation is conscious. I just think it's a result of the system that we currently have. Now, the ECB looking at the leverage in the gold market, they're kind of stumped by it as well. They don't really understand why it's there, but it's a natural consequence of the propping up of the dollar and of all other currencies. I think I said this in a previous interview. I don't remember who it was with, but someone was asking me, like, who do I blame for the manipulation, the so-called manipulation in the gold and silver market? And I say, I blame myself. And I blame you too, because we all own dollars to some extent. And if we own dollars, therefore we are short gold and silver, because gold and silver are the derivative of those dollars. Now, the leverage in the system from the pressure, I guess the logical pressure of the regression principle, that the so-called fiat system had to start from issuing debt on top of a given gold reserve, those extra dollars filter back into the gold market through the futures and create what looks like manipulation. But it's just people following spreads and traders following where they can make a quick buck by bridging a spread and making a market, and happens to be in the gold market because that's where the dollar comes from. So rather than to say that it's a conscious manipulation by an elite group of people that are saying, oh, ho, ho, stroking their beards and saying, oh, we're going to manipulate the gold market and that's how we will keep the dollar alive and that's how we will enslave humanity by suppressing gold and silver prices, ho, ho, ho. It's not that. It's just a natural consequence of the system. And that's what the ECB is realizing without even realizing what they're even saying so much. They're as confused as every other bank. They don't get why it's such a dangerous position for the bank system to be in. They're like, well, what does gold have to do with any of this? But they're looking at the positions. They have the inside scoop on it, right? They know which banks have what positions because they're in charge of all the banks, right? They're the central banks, and they're like, wow, well, if this blows up, then everyone's balance sheets are going to have holes in them because everyone's so short gold. Why is that? Why are they doing that? That's just how the system forces them to. It's what the system forces them to do because the dollar is a gold derivative. That's how it naturally winds up or unwinds.
In today's news recap, ECB looks at gold investments. Commerzbank. Gold is in high demand as a safe haven. This is all the more true these days as other supposed safe havens, such as the US dollar and/or US government bonds, have lost their appeal due to the erratic policies of the U.S. government under President Donald Trump. Commerzbank's commodity analyst Barbara Lambrecht notes, USD and U.S. GovT bonds lose their safe haven appeal. The ECB has also recently addressed the question of what the record-breaking gold market is saying about risk perception on the financial markets. The attractiveness of investing in gold in uncertain times also lies in the fact that there is no counterparty risk when gold is held in physical form, while supply is limited and inelastic, which preserves gold's intrinsic value. The ECB notes that investors have recently shown a strong preference for gold futures with physical delivery. As a result, gold holdings on the COMEX have risen sharply, according to Bloomberg figures, from the beginning of December to the beginning of April by 150% to a new record high of 45 million ounces. Investors in the Eurozone are also exposed to gold through derivatives. Their gross notional value has risen by 58% since last November to 1 trillion euros at the end of March. A significant portion of this is OTC transactions, which always carry heightened risks of counterparty default. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
So this reminds me of another argument that has been raging in the stackers community. What's the effect of Basel III? And some people have thought that it would be positive for gold prices. Some people have thought that it would be negative for gold prices. But where I fall out is that it won't be positive or negative. It'll just make everything more volatile. I don't want to get into the technicals of it now or why that is, but basically, if Basel III should make it more difficult for market-making bullion banks to buy gold to sellers and sell gold to buyers, which is what they do, right? They buy gold from sellers in London and they sell gold to buyers in New York, and that's why they have perpetual short positions in New York and perpetual long positions in London, and they make the market. And by making the market, you make it more liquid, and that by making it more liquid, you dampen the price changes. You add liquidity, you make up days less up and down days less down. Right? That's the point of it. So what we've been seeing since Basel III has been implemented is less movement in the open interest in New York. Right, you see these huge moves in gold, $100 up, $100 down, $150 up, $150 down, and a $70, $80 move. I don't know if what your experience has been, but I'm looking at my screen. I'm like, oh, another one of those. Whatever, it'll be up tomorrow, or it'll reverse itself in a day or two, or a week, or whatever it's going to be. It's not like I remember in 2013 when suddenly in April 2013 gold was down like $100, and like you're like. The stomach like drop, just and like you feel kind of nauseous like this. I'm like, well, whatever, it's $70, $80, well, who cares? And it seems like the futures market is a lot less liquid. Open interest is not going up or down that much. So it seems like whoever was saying, and I think Keith Weiner was leading the charge on this, that Basel III would do nothing positive or negative for gold. It would just increase volatility in the daily price swings. I think that's what's playing out now. I mean, we'll see if it continues, but we're getting habituated to it. So one day, gold's going to be up like $500, and we're going to be like, oh, whatever, and then it's going to be up $1,000, and then we're going to be up whatever, and then it's going to be down 800. And this is going to be it's going to get crazier and crazier as we head to the end game, and then one day it's just going to stop trading, and then it'll be done.
What do you think of Rafi's take? Do you agree with him? Is Basel III good for gold and silver in the long run, or is it just another chicanery by the central banks to keep printing paper? Let us know in the comments section down below. Subscribe if you have not yet done so, and check this video right here because it's a perfect fit for you. I'll see you on the other side.